You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 2/17/22. And, well, markets going crazy. Gold getting close to that crucial 1900 range. Is it there because there are war drums in the horizon? Or are there other factors at work? Or is it both? Right now, gold's just a hair's breadth from 1900. It's going to break it shortly. You can mark my words on that. Silver is lagging. The mining stocks are lagging. And what does that all mean? Well, our good friend Michael Moor is with us from Moor Analytics. And Michael, it is great to have you back on the show. So last time we spoke, you made certain I don't want to call them predictions, but forecasts of what markets were going to do. Why don't you tell us, share with us what in fact ensued after your forecasts?
Very well. Thank you for having me on. I appreciate it. It's an honor to be on your show. Last time we spoke was in September 14th, and we had spoken about gold. At the time, I was short-term bullish, and it rolled over from there. But in general, I said that on a macro basis, I expected it to chop sideways more until we break above a more established pattern on the upside. And we basically just chopped sideways in a narrowing range ever since then, and only over the past few days have broken out of that range to the upside. So I think that this has significant potential in the months and weeks ahead, with the good likelihood of running back towards the highs of 2,081 an ounce and test above there, and then maybe test some other macro exhaustion levels before having a larger bearish correction. So
what was the resistance point? 1850, I guess, 1880. But
we had a massive line coming down. I mean, it wasn't very specific as how you could draw it, which is not normally the case. But around in the 1850s, we'd broken out. And I mean, I had lower formations that I've been bullish from, but I'm talking about the major one was up there. But I got bullish. I've been bullish for multiple levels, but the most recent level was in the 1829s.
So what's this? What is the fact that we're at nearly 1900? Is that portending more upward momentum still?
I think in general, now bullish. I do think that just this recent stretch from January 28th upwards, I do think that we'll see a lower time frame bearish correction against that move before seeing, before if we see more substantial higher move. So there's exhaustion levels in there at 1904 to 1908. If we take that out, though, this thing could really keep on moving. So we'll have to see that. If this market really gets damaged below, like the 1830 area, then it could start collapsing again. So if it got down 1825 or something like that, then the market would be in bigger trouble.
What is your take on what's happening in the Ukraine with Putin? War drums, obviously. The stock market seems to be completely indifferent to it. The precious metals markets arguably are going up because of it, but there could be other factors involved there, just the natural cycle. Cryptocurrencies, they've been kind of in the dumps here. And really, I wonder if the markets are really indicating war, because usually the markets, when it comes to war, are really on top of it.
Yeah, I mean, again, my wheelhouse is more on a technical basis. I'm not as much of a fundamental or geopolitical analyst. I think obviously, a war over there is not going to take anybody by surprise trading oil. Obviously, it's been pretty obvious what they're doing. If they went out to all-out war, obviously it would make some difference, but the day-to-day thing is really I know they started shelling over there today, I believe I heard, but that'll just have to play itself out more for it to really affect things. Because, a lot of it's already priced in, I think.
But how do you really price in a war? That's the question. But I realize, you're strictly looking at the charts, but the charts invariably, you go back to multiple wars and you can pretty much pick out where the charts have figured out that war was imminent.
Yeah, I think, this is a little bit different than, just an event like a pipeline exploding and something happening really fast. This has been developing over months. That's what I mean as what has been priced into the market. Then once you get further into a war, then it's a matter of where it's going and the other geopolitical aspects of pipelines being shut down and other things like that. And then how it spreads from there.
All right. Okay. Well, I'll buy that. Okay. Other markets. Let's take a look.
So we had talked about natural gas back in September again, and it was trading 5,000.20 per 5,000 BTU. And it was bullish since we had broken 2,066. And I said I wouldn't be surprised to see a pullback because at the time we were holding an exhaustion level at 5,041. We did see that pullback. We came off to 4,056 before continuing the bull trend, and we ultimately rallied up to 6,006 before coming off and going into another bear trend. So that was the follow through on the upside. So again, I was bullish then, but we were holding exhaustion. I was expecting a pullback before it resumed higher trade. That's what we saw. We saw the pullback of $900 per BTU before rallying back up to 6,006.
Okay. Interesting. What else you got for me here?
So we also talked about crude oil.
Right.
And this is, again, going back to September 2021. I said that I had significant projections to the upside, as we had spoken about 2 months prior to that. And I was bullish from April of 2020 from the $15 and $37 a barrel area. And at the time we last spoke, we were up $61 from there. We have since rallied another $20. We're up $80.45 from that $15.37 area. I also said at the time that we had broken above a really significant formation at $57.45 a barrel, which projected this upward $56 minimum a barrel, $110 plus maximum a barrel. And we're only $18 into that. So I still, from a technical perspective, expect to see a lot more to the upside in crude in general. From the 57.45 area, we're $37.80 into that.
All right.
We were $18 above it when we talked. Now we're $37.80 into it now. We also had when we spoke, and I said that we had also broken above a new formation at 69.70 that projected this upward $1.95 minimum, $9.85 plus maximum. And we have seen $26.12 since then.
All right. I like that. And you kind of mentioned nat gas already.
Right. Oh, and by the way, currently in the crude oil, just today, the gas and the crude oil rolled over a bit. We've been trying to test below some bearish lines. So we may see a bit of a bearish correction within the next week or so, but I think that ultimately it's still going to go higher. So there is some risk to the downside, but I don't think if we break some of these formations, it's going to be a massive bearish formation by any stretch. Just going to be a deeper pullback and then another rally.
And that's the energy sector in general, right?
Yes.
Because regardless what you're looking at, well, we don't really look at coal prices. But if you did look at coal prices, you'd see a straight line up, literally exponential price increases. And in our new green economy, we're seeing record coal consumption in the world, throughout the world. So I find that entertaining for a number of reasons, right? But nat gas, oil, and even uranium is up. Uranium, for various reasons, been in the dumps for a decade, almost a decade. and now it's having its day in the sun, right?
Yep.
So all energy is a pretty good bet, unless we have this global shutdown, right? Where everything just shuts down and nobody drives anymore, and everybody turns their thermostat to off, right?
Don't just survive, thrive. The Financial Survival Network.
Trilogy Metals is a world-class developer in Alaska's Ambler mining district. The company already possesses 8 billion pounds of copper, 3 billion pounds of zinc, over 1 million gold-equivalent ounces, and now over 77 million pounds of cobalt. Trilogy's Arctic project boasts an after-tax net present value of $1.4 billion with a 33% IRR. Trilogy is led by an experienced management team with proven success in discovering and developing projects in Alaska. The company is well capitalized, has no debt, and possesses strong institutional support. Trilogy trades on the New York and Toronto exchanges under the ticker symbol TMQ. To learn more, go to trilogymetals.com. That's trilogymetals.com.
This is the Financial Survival Network. The information you need to thrive now more than ever.
I read an interesting article a while ago that said that although the European Union's trying to move towards electric cars, the California is and everything like that, that there's this huge secondary market for fossil fuel cars in second and third world countries that is really driving the demand for fossil fuels even more.
Well, I mean, let's get real here, Michael. You're in Guatemala and you're looking for a charging station,
right?
Run out of batteries here. There might be a few in the country. You're in Cuba. I don't think they know what a charging station is, and they could use electric cars more than anyone because every car runs on a remanufactured 2-cylinder Russian diesel engine, spewing out fumes that you want to just die. All these countries like China, Western Europe, they got charging stations. But go over to Mongolia. I challenge you and try to drive across the country in a Tesla. You're going to have issues for certain.
Yeah, I just, the infrastructure is just not there in a lot of these other countries. And I'm not sure where the financing would come from, but yeah,
where it always comes from. But look, I'm not by any means an opponent of electric cars. I own a Tesla. Love it.
Right.
It's the best car I ever had. But if I'm traveling through India, maybe that isn't the best car. Maybe I still got to rely upon good old fashioned petrol, right?
Right. Yeah. I mean, as far as the energies being tradable markets, setting aside people's political or heartfelt stances about energies, I just think that the energies are really the only thing that's going to fit the bill for the huge demand for energy that's out there.
Yeah.
For at least the next 8 or 10 years.
Oh, the next 20 odd years, because they cannot currently build 80 million cars and light trucks per year globally. All right. It's just getting up to 10% now. That means that 72 million vehicles that hit the road are based on hydrocarbon fuel. So unless somebody comes up with a brilliant way to retrofit them cheaply and turn them into electric vehicles, which that might happen, and I think that could be a bigger market than the actual EV market. But look, I've been a car person my whole life. In every single facet, other than range and time of charging, electric vehicles are superior in every way to regular ICE engines. So, but anyway, we digress. But the point is, energy demand is going to increase from a fundamental standpoint, but from a technical standpoint, it seems to be confirming the fundamentals, doesn't it?
Yeah, and that's the interesting thing about technicals is although the fundamentals are the basis of why markets move, the technicals, which is reflecting changes in price pattern, will get you in on those fundamental movements earlier than the fundamentals reveal the trend. It will get you in on those earlier 85 to 90% of the time, and get you out 85% to 90% of the time quicker than the fundamentals will either. And that goes for not just novice traders, that goes for very well-informed traders on the desk at Conoco or Exxon or wherever else. It's hard for anybody to pull together all the supply and demand on a world level in a short-term basis, on a fundamental basis to make a trade. That takes a bit longer for that picture to come to them. Whereas the price patterns is a summation of the sum total of all those people trading the market at any given moment. So that's why I believe they consistently get you in the markets earlier than those fundamentals tell you.
And let's face it, it's human nature, right? It's human nature. Markets, charts just show human nature. I'm a big believer in charts, but when you get technical confirming fundamental, or vice versa, fundamental confirming technical, and you don't always know if you're getting the right story, but in this case, I think it's pretty clear, then you've got the opportunity for a huge move up. Hey, so any other markets we need to review?
No, I was just going to say one of the other questions you had asked me last time is what market did I think had the biggest upside out of the gold, the Bitcoin, or the energies? And I said that the energies, specifically the crude, the RBOB, and heat, had the biggest potential in my view at that time.
You're so right.
I think you've seen that play out. One thing we didn't talk about was the Bitcoin. And at the time, I said that we were in a bearish correction against a bullish move, and that I expected ultimately that we would resume higher trade after that.
Yes.
500. We saw 2,000. We saw 2,000 of that with a run towards 48.6, and then fell back below it, which I said would see a move down to 43. Mm-hmm. And we came off down to 40 actually, and then resumed the bull trend up to 69,335. Since then, we've been in another bear trend, but we have since broken out of that bear trend a couple of days ago. Let me pull that up real quick.
Yeah, please do. That's something I follow. You know, I am all over cryptos. I have a small position in them. I'm not retiring on them yet until the dollar collapses. But until that point comes, let's face it, there's a pretty compelling case for them.
So in the Bitcoin, we broke above a formation at 38,510, which projected us upward 7,300 minimum, 8,300 plus maximum. And we attained 7,395 so far before rolling over. I think currently right now, we're just in a lower time frame kind of bearish correction against that move up from the lows. But I think ultimately it's probably going to hold some exhaustion down in here in the 41 to 40 area. The next level below that would be the 39.5 to 39.25 area, and maybe as far down as the 38 area. But ultimately, I think that we're going to resume higher trade. But we've clearly negated the bear trend that we were in on the 4th of February.
Okay. All right. Well, but it's kind of been, it doesn't look real bullish to me, but I'm not looking at it the same way you are in all likelihood.
Yeah, it's broken out of that bearish trend. It has a small, well, I don't know if it's small, it was fairly decent projection to the upside. Whether or not that continues and rallies up into a new bull trend or not is another story.
Gotcha. All right. Well, I like what I hear. Michael, just tell us where is the best place to find you these days?
You can find me on my website if you want, mooranalytics.com. That's spelled M-O-O-R, analytics. There's no E at the end of that. And I post on LinkedIn usually a couple times a week, blogs, small snippets of the analysis I do. And I also post on Kitco. But again, those are just small snippets of a much more in-depth analysis. I look at my analysis not as a newsletter, but as a trading tool for professional traders, hedge funds, and industry companies.
All right, which is what we like. If you got a question for Michael, shoot me an email to kl@kerrylutz.com. Don't forget, go to our site, financialsurvivalnetwork.com. Get your free weekly newsletter. And Michael, always appreciate you coming on. Talk to you again real soon.
Thank you very much, Kerry. It's been an honor.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now. more than ever.